Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, 21st day of October 2020, and this is the daily report for gold and silver. We saw a nice breakout above 1920, which was our parameters for triggering a buy signal. We did issue buy signals across the board. We'll talk about that in detail, along with why we placed our stops where we did when we look at our technical studies. But first, to the price board. Traders, we saw a major breakout in gold after trading higher now for the third consecutive day. Gold futures are currently fixed at $1,927.70. We did send out a special trade alert this morning for both gold, silver, SLV, and GLD. And we will cover that in detail, of course, when we pull up our charts. But today's gain was about 0.6%. And it had a high today of 1936. If you recall, during this week and last week's shows, we have spoken about the fact that we wanted to see gold break above effectively 1920, which would indicate a technical breakout to the upside. We certainly got that today. Silver also gained about 0.8%, a total of 20 cents, taking December futures to $25.18. SLV gained on the day about $1.17 a share, $23.29, and GLD gained approximately $1.35 per share and is currently at $180.60. And that was all with dollar weakness. However, today's drawdown amounted to 0.46%, much less than gold's gain of 0.64%, or silver gaining 0.83%, which tells us that not only was there dollar weakness, but there was also brisk buying in both precious metals. We are recording these inserts after 12 noon here, or 5 o'clock in New York, which in essence means that we are now trading in Australia. Current bid is 1928.60. We've seen it fluctuate between that and approximately 1929. What is most important is the channel line that we have spoken about on many occasions that has definitely seen this market have a upward bias, and we can say that it continues to follow course. But what is more important to me right now is the fact that when we look at the breakout that occurred earlier today, what we see is a definitive and defined breakout above 1920, and that has been a price point that we have spoken about as really being significant in terms of where current resistance was. And that in fact triggered a trade alert. Traders taking the call got into December futures anywhere between 1925 and 1926.5. Stops were placed at 1907.30. Forex gold traders got in at 1922 with a protective stop at 1903. We will discuss our upside target as well as why we placed our stops with a much shorter term chart. The chart that we're looking at is a line chart based upon the close every 240 minutes. And I draw your attention to this long-standing resistance line starting from the record high. And of course, that was achieved in August of this year when market forces took gold up to 2,088. And this particular high here at 1937 to create our downward resistance line. We definitively broke above it, as I said, when we broke above 1920, and that was really the trigger that we were looking at in terms of issuing a buy signal. Which brings us to our stop placement at 1907.30. As you can see, we have converted that line chart into a candlestick chart, and we really have to blow this up so you can see what I was looking at. But in essence, what I'm thinking is if the market is going to rally, it will continue to make a series of higher highs as well as higher lows. You notice that there is one red candle that comes in after 4 consecutive uptick candles, and the low on that candle comes in roughly at 1909. I put it a couple dollars below that to put it at approximately 1907, 1907.30 to be exact. That is where our stop is in gold December futures. Maintain your current long as well as your current stop. Traders, we're looking at a 240-minute candlestick chart of silver. Our recommendation was to buy at the market. Silver was trading at 25.13 and is currently at 25.16 as it trades overseas. We recommended placing a stop at 24.73, and that was based upon this red candle here on our 24-minute. As you can see, this low comes in at approximately 24.75. Our stop's at 24.73. Maintain your long silver position. Maintain your long Forex gold position. Traders, we will focus upon our exit strategy in detail tomorrow, but for right now, our next real target has to be approximately 1937, and that is the 23% Fibonacci retracement. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.